Uncle Paul, Walgreens may be in trouble here a bit. On Market Watch, Walgreens and CVS stocks tumble after Amazon launches rival pharmacy. This is intriguing, Paul.
Why is this intriguing?
Well, I can't imagine. I think the world has been going to the pharmacy for a long time, and is it weird that Amazon's going to be delivering? I know people get medications through the mail, but I'm intrigued as to where this is going to go. So I always ask you, by the way, welcome to the show. I love you. Paul, I always ask you, and I love you too, that like we're looking at companies and we analyze stocks and companies all the time. And you have now brainwashed me and convinced me that we're not always looking for companies to buy. We're just weeding out hundreds of companies to find those really great ones. And I always say, well, wait a minute, when one's in the tank, when a stock is low, obviously everyone always says is now time to buy. So I'd like to use our 8-pillar analysis to take a look at Walgreens.
Well, we did, if you remember, the reason this is interesting is Walgreens was brought to me on a live stream by somebody. It didn't hit my screener, because if you look at its PE right here, guys, look at its PE. It's 80.
This is our first pillar of our analysis is PE ratio.
So X, and the reason being is I was thinking to myself, like 80 times earnings, I mean, this sucks. Then we went and delved into it a little bit more, and we realized that 80 was a little misleading. There was some high expenses that were occurring because of acquisitions or some restructuring, things like that. So I think it was misleading things. Now, this is always a concern with any sort of retailer. Is Amazon going to enter their market and all of a sudden dominate them, especially if they figure out one-day shipping and things like that?
Oh yeah, okay, right.
That is the concern here. I bought Walgreens after our live stream. I bought them at 37, and they got all the way up to 43, 44, and today they're at 40. So I'm still in the positive on mine, and we're gonna go through it, and I'm gonna say why I'm keeping my Walgreens stock from a fundamental standpoint.
Really? Okay.
Yeah, I mean, I could be wrong. Remember, the whole point of investing is, guys, you make assumptions. Some of those assumptions will turn out to be right, some of them will turn out to be wrong. The question is, do you think Walgreens is going away or not going away? That is a very good question to ask. Also the question is, look at their market cap, $35 billion. I'm actually surprised Amazon didn't try to buy Walgreens. That was always my thought, was like, what would they try to do? Would Amazon just sit there and say we're getting rid of it? Or do they want to have this Walgreens sitting there and go, hey, it's $35 billion, we're worth $2 trillion, let's just go buy them out.
Chump change.
Chump change. So
let's look at pillar number 2, which is profit margin for Walgreens. Pillar number 2.
So like most retailers, it's abysmal.
Oh my gosh, 1%. Paul.
Yeah, I mean, it's absolutely terrible. I think this is still bad because of their write-offs, things like that. It should be higher, but I'm thinking it's gonna be 4 or 5% at most. They have a pretty solid gross margin, 20%. You know, Walmart is at 25%. So it's about where it is. Remember, Walgreens is selling name brand stuff mostly. They're holding a lot of inventory, so it's understandable that their profit margin's not gonna be huge. So far we have 2 X's.
That dividend looks okay though.
The dividend looks solid. The question is it a safe dividend? 4% on $35 billion is $1.3 billion. So they're going to pay out about $1.3 billion in dividends. So what does this mean? When we go to the free cash flow section, they need to generate a substantial portion above this to feel comfortable that this dividend is supported.
How about pillar number 3, which is profit growth? I'm sorry, revenue growth over the past 5 years.
So we go to the financial statements.
Revenue growth.
We go to the income statement.
And as always, you can find this information on Yahoo Finance or
Google Finance, or if you're patient, we're gonna have an app here in the next 9 to 12 months. It's being done right now. My developer told me yesterday he'll have a working version on a website for me by January sometime.
Come on.
For a website for me to test out. And then from there, we'll build the app. So.
Revenue growth.
What do you want them to do?
Make sure you smash the like button, and make sure you, as always, you subscribe to get Paul, we're recording so many episodes. Don, we do an episode a day, right? We live stream twice a week.
Monday, Wednesday, Friday recordings.
Yeah. Yeah, we're bringing you every single day. We're bringing you new content. So
every weekday there is new content.
Yeah, go ahead and subscribe. Make sure you get our content, and as always, make sure you smash that like. Go ahead, Paul. What do you think about revenue?
117 billion, 118 billion, 131 billion, 137 billion, 140 billion. Check mark there.
Good stuff. How about profit growth?
Well, I also want to go back to 2011. They had 72 billion, so they've doubled. I'm sure there were acquisitions along the way, but they have almost doubled in size in the last 10 years. That's 6 or 7% growth a year. That's pretty solid.
Pillar number 4 is profit growth, Paul.
Okay, net income. Now here's where I talk about the whole 80 times PE. 4.2. So here's the profit for the last 5 years. 4.2, 4.1, 5, 4, 400 million.
A tenth of that.
Correct.
What's going on?
So their profit is actually, when you take their profit actually is about 10%, when it comes to, because look at this, they did $4 billion in profit on, no, sorry, I'm still wrong. It's still 3%. But still, the whole point is this is a very big year down in terms of profit. There was some write-downs in here. When we went and researched it, there were some restructuring costs that are one-time costs. I'd be concerned if it was a consistent thing over and over. But if you look over the last 10 years, they don't have any major write-downs like that. So this was definitely now, is their profit decreased in the last 2 years? Yes. Is that a concern? Absolutely. We have to figure out why that is and go from there.
How about pillar number 5 is number of shares outstanding? We want the actual number of shares of stocks to be reducing, to be healthy.
1.08, 1.07, 990, 920, 880, check mark.
That's good stuff there.
That's very good stuff. What's the next thing,
Pillar
Seth?
number 6 is current assets greater than current liabilities. Want to make sure that basically the cash in their bank can pay their bills, right, Paul?
Yes, sir. So total current assets is $18 billion. Total current liabilities is $27 billion. That's an X, folks.
Uh-oh.
That's an X. I wonder why that is. Interesting.
That's big time. Almost, are they not doubled up, but close?
No, it's about, they have 50% more current liabilities than current assets. Now, let's go to the important one.
Free cash flow growth, which is pillar
Free
number 7.
cash flow.
Free
So-
cash flow. This is going to pay their dividends, right, Paul?
Yes, so remember, free cash flow is cash from operations less their capital expenditures. And the capital expenditures, take them as a positive number, not a negative number. So here, Seth, you ready?
Yes, go ahead.
6.5, 5.9, 6.9, 3.8, 4.1. So it's an X. It is decreasing. The average is?
5.4.
Now, on this one, this is why I'm interested in this. They're currently selling for 38 billion? Mm-hmm. Divided by 5.4. That's 7. They're selling for 7 times free cash flow.
Okay, slow your roll there, homie.
So,
38 billion is their market cap.
yep, so if you want to buy the entire company right now, was it 38 billion? What was the total amount?
Double check, make sure.
34 billion, not even.
Even better.
Even better. So 34 billion. That's about 6.5.
6.3.
6.3.
Wow, okay, so
guys, this means for every dollar of free cash flow, you're only paying $6.3 for it. To give you an example, whenever it's in single digits, I'm very, very interested. That basically means I'm gonna get $1 of free cash flow, and in 6.3 years, I'm gonna get my entire investment back. That's essentially a 16% return on your money.
okay.
That's a pretty incredible return. Now, the question is, why is it so low? Well, the Amazon play is going to be a big part of it. People wondering if retail in general is going to be good or bad for the going forward. Things like that. They have a very how many stores do they have? 19,000 locations
Wow.
in 50 states
That's
and
amazing.
25 countries.
This is huge.
This is very huge. Now, do I think Walgreens is going away? I don't. Would I be shocked in 5 years they were gone? I would be. Do they have to do some changes in terms of how they deliver? Absolutely. They need to figure out a way to be able to compete with Amazon and be able to become people's first choice. Now, the great news is when you're driving down the street and you see a Walgreens, you're like, oh shoot, I have to go pick up this, this, and this, and this.
Yeah.
You can't just do that with Amazon. You're right there driving. You can go to Walgreens and pick it up. That's the benefit. Does that mean that? I also think that when it comes to customer service, it'll be hard for Amazon when there's a problem with pills to be able to talk to a pharmacist right then and there and say, I have this problem. When you go to Walgreens, what are you doing?
Yeah, you can talk right to a person.
Right up the counter and say, hey, pharmacist, here's my issue.
Yeah, a trusted pharmacist, sure.
There's going to be benefits still. I still do believe that there are benefits to having a physical location that's local to you where you can walk in and say, I have this issue or I need help with this. Now, can Amazon fix that problem? I'm sure there's ways for them to do that. But how much infrastructure will it require, et cetera, I don't know. But again, this is a reaction today. Is it an accurate reaction? I don't know. Maybe it is. But I'm not dead on Walgreens. And I think to myself, selling for 6 times the last 5 years free cash flow or 8 times the previous year, I'm still okay with that and still saying, okay, I think this is deep enough discount where I can make this bet and say, I'm in this for the long haul. Do I think this company is worth more than $40 a share? I do, But things could change in the future where all of a sudden something happens where Amazon really does crush them, and I go, oh shoot, what am I going to do? I have no idea. But the bottom line is, I'm still plus on Walgreens. Are there issues? There's always issues. No company will ever be perfect. You're not going to find the perfect situation, and if you do, there's probably something wrong there. But I'm still happy that somebody brought up Walgreens. I liked what I read. Again, on the pillars, how many even X's did we have? How many check marks did we have? Not many.
Not many, yeah.
Yeah, we didn't have many. We had revenue growth. We had
a profit growth?
No, remember the profit growth last year was like negative growth.
So shares were down.
Actually, guys, the only thing that was a positive was 7 and 8.
Yeah.
I don't even think 7 was the free cash flow growth there? Was it increasing?
I can't remember.
Either way, it was maybe 3 check marks.
Yes.
But I still bought the company. But there might be a reason why that is, though. It's kind of looking and going, well, listen, this is a big company that's selling for a low multiple. Everybody's negative on it. That's probably why it's attractive to me, right? So again, don't just go off the pillars, because the pillars, if there's 8 check marks, it doesn't mean it's a buy. And if there's 8 X's, it doesn't mean it's a not buy. It's just, we have 5 X's here and maybe 3 check marks, and I still bought the stock. And I'm still up on it even after this drop because of Amazon. And again, I don't look at short-term stuff, but I am up. I bought it $37 and it's now at 40.
Make sure you're subscribing to our page to get more updates on stocks, health of company, and we do other things, Paul. Real estate, other investment, business growth. Yes, you look wonderful in purple, and a great analysis on Walgreens. So at what price do you love this, Paul?
I mean, I like it right now even. You have to decide if you're okay with this Amazon risk. I still like it at $40. Whenever I buy stock, I'm one of the few people who's like, go lower, go lower, go lower, go lower. And I'm like, crap, it's not going lower. It went straight up from when I bought it. Same with like Southwest Airlines. I mean, it hit $50 a share or something when I bought it at 25 in April or May. And I was just like, oh, F. So, these are the things that's why my stock portfolio is very small right now. It's only 4.8% of my portfolio because I'm waiting for things to fall in price. But as this falls lower, this might be an opportunity for me to sell some put options on it at lower prices, which reminds me I should tell Mo about that. That way we can start looking at that. But, I think it's, I think if you can accumulate shares at this, it's single-digit price to free cash flow, and you believe the company's going to be around for a long time and still able to grow, then I think you'll be fine.
Thanks for joining us. Hit the like button. Love you guys. See you soon.